America's financial heartbeat is collapsing in slow motion. Over 61% of Americans now live paycheck to paycheck, and even households earning $120,000 are falling behind on rent. The average grocery bill has exploded 68% since 2019, while car insurance and electricity have doubled. Credit card debt just breached $1.25 trillion, with average APRS over 24.5%, the highest in modern history. Meanwhile, wages barely moved 3%. A full-time worker today earns the same buying power as someone in 1999, yet faces costs that belong to 2025's dystopia. This isn't inflation anymore. It's economic suffocation disguised as progress. Behind every paycheck, there's a quiet panic Americans no longer talk about. What used to be financial stress is now a full-time survival routine. The disturbing truth is that debt has replaced income as the foundation of everyday life. According to recent surveys, 4 in 10 hourly workers say simply getting through 2 weeks without borrowing money would feel like an upgrade in living standards. That isn't progress. That's desperation normalized. People aren't dreaming of savings anymore. They're praying for balance. A $1,200 paycheck disappears before it lands. $900 goes to rent, $150 to utilities, and the rest to groceries that barely last the week. The moment the card swipes, the cycle restarts. Overdraft, credit card, buy now, pay later, and short-term loans just to stay afloat. These are not luxuries or irresponsibility. They're lifelines disguised as convenience. This transformation didn't happen overnight. For decades, wages flatlined while the cost of survival kept rising. But now, the line has snapped. Americans are no longer stretching their money. They're stretching time. Every paycheck is borrowed from the future. And the deeper truth? The system was designed this way. Inflation might make the headlines, but it's the financialization of daily life that quietly devours the middle class. When interest payments become as routine as breathing, you've entered a new economic reality, one where debt is the only currency that still circulates freely. Even high-income earners aren't escaping the squeeze. Families making 6 figures are juggling car payments, student loans, and soaring insurance costs while pretending everything's fine. They're living proof that the American dream has mutated, no longer about ownership but maintenance. Every statistic points to the same conclusion. What used to define poverty, insecurity, debt, and anxiety has crept into the middle and upper tiers of society. Millions are still working, yet their labor no longer translates into stability. That's not personal failure, it's systemic erosion. Because when survival itself becomes a transaction, the nation's wealth isn't growing, it's cannibalizing its own people. And the cruelest irony? The same institutions causing this collapse are now measuring it, declaring, everything's fine. The numbers don't lie, they expose. What Americans are experiencing isn't inflation anymore. It's an economic recalibration where survival itself carries a premium. Since 2019, consumer prices have surged nearly 32% on paper, but real-world costs tell a far uglier story. The average household now spends $709 more each month for the same essentials they bought 4 years ago. Food is up 68%, rent up 37%, utilities up 41%, and healthcare premiums have quietly jumped past 55%. What's collapsing isn't just purchasing power, it's the foundation of modern living. That $1 bill from 2019 now buys just 72 cents worth of goods. The nation's currency may still say, "In God we trust," but the economy now operates on debt, not faith. And the tragic part? This erosion is invisible in official metrics. While the government touts cooling inflation, the real cost index, the amount required to maintain the same lifestyle, has risen 64% since 2020. For millions, this isn't economics. It's slow disintegration. The grocery aisle has become a battlefield of shrinkflation. Packages shrink, prices don't. A box of cereal that once fed a family for a week now lasts 4 days. Utilities add adjustment fees, landlords add market adjustments, and insurers quietly lift premiums under risk recalibration. The American worker isn't lazy or unproductive. They're being priced out of their own existence by a system that monetizes every necessity. Even the illusion of comfort is collapsing. The once manageable expenses, internet, phone, gas, have evolved into stealth taxes on modern life. The average family of four now spends over 80% of income on non-discretionary needs, leaving less than 20% for everything else: savings, emergencies, or even basic leisure. This ratio used to be 60% just a decade ago. Every statistic points to one truth: survival has become a subscription service. You don't own stability anymore, you rent it monthly at a rising rate. And when every essential product, service, and opportunity is indexed to profit, freedom itself becomes unaffordable. This isn't inflation. It's a controlled extraction of living standards, a slow, methodical draining of the middle class disguised as economic growth. The American dream hasn't vanished. It's been repriced out of reach. Every crisis needs a disguise, and in America, that disguise is data. The Federal Reserve insists inflation is under control. 2.8%, they say, as if a statistic can erase the panic at the checkout counter. But this isn't economic management, it's narrative engineering. The official figures capture averages, not realities. They flatten pain into decimals. The truth is that the real inflation experienced by working households exceeds 40%. Yet the institutions shaping policy pretend the suffering is psychological. Behind this illusion stands a trillion-dollar mechanism of control. The Fed isn't fighting inflation, it's managing perception. By adjusting interest rates, it manipulates behavior, not prices. Drop rates too low and you flood the system with cheap credit. Raise them too high and you strangle growth. Either way, ordinary Americans lose. Their savings erode when money loses value, and their jobs vanish when borrowing costs spike. What's sold as stability is actually a slow-motion redistribution of wealth upward, from labor to leverage, from wages to capital. Meanwhile, the financial class thrives on volatility. High rates crush the poor but reward the lenders. Low rates inflate asset bubbles that the rich can escape before they burst. This is not incompetence, it's design. The Fed's dual mandate, stable prices and full employment, has become a paradox it no longer tries to resolve. Stability for markets now means instability for citizens. The numbers that fill official reports are mathematical stagecraft. Unemployment, 4.1%, they claim. But count the underemployed, the part-timers who want full work, the millions earning below subsistence, and that number triples. It's not 4%, it's closer to 25%. A quarter of the nation is either jobless or functionally excluded from prosperity, yet we're told the economy is resilient. This is why trust is collapsing. People sense the deceit even if they can't quantify it. They feel it every time their paycheck stretches thinner, while economists celebrate moderation. America's financial system now operates like a mirror maze. The reflections look infinite, but the walls are closing in. The more the Fed claims control, the less control the public truly has. The economy may still appear alive on paper, but beneath the data, the pulse is fading. For example, job market. The so-called booming job market is America's most successful illusion. Politicians boast about millions of openings, but behind those numbers lies a digital graveyard of listings that will never be filled. Corporations flood job boards with phantom positions to project strength, inflate investor confidence, or satisfy regulatory requirements. They know the optics matter more than the outcome. A single company can post 200 openings while hiring 2 people. The rest? Empty promises engineered for quarterly reports. Yet, these numbers feed into the same official statistics that paint a picture of resilience. The result is a labor market that looks strong on paper and hollow in reality. Job seekers apply hundreds of times, only to meet automated rejection systems or endless interview loops that lead nowhere. The illusion sustains the myth of opportunity, a convenient distraction from the truth that real wage growth has stagnated for nearly 2 decades. The country isn't experiencing a labor shortage, it's experiencing a shortage of living wage work. This deception extends beyond the workplace. The underemployment epidemic, Millions forced into part-time, low-wage, or contract positions has become the backbone of the modern economy. Workers are labeled independent, yet they have no independence at all. They rent their labor by the hour without health care, retirement, or protection. 1 in 4 Americans now earns less than $25,000 annually, a figure that can't even secure a studio apartment in most major cities. The tragedy is structural, not personal. By misclassifying jobs, padding reports, and redefining what employed means, the system manufactures stability that doesn't exist. It convinces people that if they just try harder, they'll succeed, when in reality the system itself is mathematically incapable of rewarding them. A functioning labor market should connect human effort to security. America's version connects it to survival anxiety. And all of this loops back to the same machine that feeds Wall Street optimism and government spin. The Fed points to low unemployment as proof of recovery, while half the workforce lives one medical bill away from bankruptcy. The facade holds, for now. But the pressure is rising. An economy built on manipulated numbers and unpaid labor doesn't expand forever. It eventually implodes, quietly at first, then all at once. As the illusion of stable employment fades, a new economy has risen. One powered not by productivity, but by borrowing. Debt has become the nation's bloodstream. Every purchase, every necessity, every moment of relief now flows through credit. Americans collectively owe over $1.25 trillion in credit card balances, a record that grows by billions each week. Average interest rates hover around 24.5%. Yet banks call this normalization. It's not normalization, it's legalized extraction. Credit is no longer a tool, it's a leash. Households aren't spending to live, they're borrowing to survive. A full generation has been conditioned to measure success not in ownership, but in approval limits. The buy now, pay later culture has metastasized into a psychological addiction. A $300 grocery bill, a $900 rent gap, a $60 phone plan, all pushed into the future, stacking silently until the future collapses under its own weight. The worst part? This system was engineered to appear empowering. Frictionless apps, instant approvals, zero-interest teasers, digital sedatives designed to dull the awareness of enslavement. Young Americans now manage 5 or 6 credit accounts before earning their first salary. Default rates are surging by 18% year over year, yet the companies behind these loans call it expected churn. That's corporate language for human failure. Debt has replaced wages as the fuel of economic activity. It props up consumption, masks wage stagnation, and keeps the illusion of growth alive. But beneath that illusion lies decay. Each interest payment represents a transfer, from the worker's present to the lender's future. It's a negative savings rate disguised as economic momentum. And when repayment finally breaks, the cycle restarts with more credit. The entire system thrives on the inevitability of collapse, because every default becomes another justification for higher rates, new fees, and fresh products. The more Americans drown, the more profitable drowning becomes. This isn't capitalism. It's cannibalism disguised as opportunity. Debt has replaced democracy as the organizing principle of American life. Citizens don't vote with ballots anymore. They vote with credit scores. And the outcome of every election is already decided. The banks always win. The economy doesn't grow because of debt. It survives through it, for now. Every financial empire needs new debtors to sustain it. And in America, that role now belongs to the young. Gen Z has become the backbone of the modern credit economy, not through choice, but through coercion. By their early 20s, the average young adult carries over $21,000 in non-mortgage debt and nearly 3 in 10 use credit to buy food. They aren't reckless, they're cornered. The cost of entry into adulthood, education, housing, transportation, has inflated beyond mathematical reach. The median home price now equals 8.6 times the average annual income for people under 30, compared to 2.9 times in 1980. A generation once told that education was the path to prosperity. now graduates with $1.77 trillion in student loans and faces job offers that barely cover rent. Their disposable income doesn't disappear. It's confiscated through interest. Every swipe, every subscription, every deferred bill transfers wealth upward, pixel by pixel. The system disguises this exploitation as innovation. Flexible payment plans, financial inclusion, microcredit access, new words for the same ancient mechanism, dependence. Even their hope is leveraged. Housing apps promote co-buying platforms, turning friends into co-mortgage partners. Employers push early wage access tools, essentially digital payday loans and corporate clothing. The young are no longer customers, they're collateral. The psychological toll is equally precise. Surveys reveal that 63% of Gen Z reports daily anxiety about money, a rate higher than any age group in US history. Economic fear has become the default emotional state. That's not coincidence, it's control. Fearful citizens don't demand reform, they chase survival. The more they chase, the deeper they sink. This generational experiment ensures one outcome: perpetual subservience. When the cost of existing exceeds the reward of working, rebellion becomes impossible. Millennials delayed wealth. Gen Z may never see it. They are the first generation to inherit a nation richer on paper but poorer in promise. The debt trap that devoured their parents has evolved into a full-spectrum capture system: digital, emotional, and generational. And as the previous sections reveal, this isn't a side effect of mismanagement. It's the next phase of extraction. When the young can't afford to build, the old can keep selling. The American economy no longer rewards youth. It monetizes their future. The pattern is unmistakable. Every empire that loses control of its money first loses control of its truth. America is repeating the same inflation cycle that nearly broke the country 5 decades ago. Only this time, the scale is nuclear. In the 1970s, inflation peaked near 13%, cooled temporarily, and then surged again, triggering a brutal recession. The same mechanism is quietly reawakening. We saw the first wave between 2021 and 2022, when prices spiked nearly 9%. Then came the illusion of stability, a brief pause, not a recovery. Now inflation is creeping upward again, and this time, it's structural, not cyclical. Unlike the 1970s, today's inflation isn't just fueled by oil shocks or labor disputes. It's embedded in everything: logistics, rent, healthcare, education, digital services, and even data. When inflation becomes systemic, it doesn't rise in bursts, it compounds silently. Every rate hike and every stimulus from the past decade now collides in the bloodstream of the economy. The Federal Reserve's temporary cooling period didn't cure inflation. It only muted it long enough for the next surge to build pressure. This second wave is more dangerous because the system itself is weaker. In the 1970s, America had manufacturing strength, rising demographics, and a trade surplus. Today, it has a $38 trillion federal debt, collapsing productivity, and a consumption economy held together by credit. You can't fight inflation with interest rates when the nation's entire structure depends on borrowing. Each percentage point increase now costs taxpayers hundreds of billions in new interest. A feedback loop that turns monetary defense into fiscal suicide. And as inflation accelerates, the illusion of prosperity crumbles. When prices rise faster than wages and the dollar weakens against goods instead of currencies, inflation becomes a political weapon. It erodes trust, fractures institutions, and fuels populism. It transforms economic mismanagement into collective despair. The tragedy is that this crisis isn't random. It's predictable. Every data point, every policy decision, every market surge is following the same trajectory that history already warned about. The 1970s ended with stagflation and recession. This time, the correction will be sharper. Because unlike that era, there's no industrial base to fall back on, only debt, speculation, and denial. Every cycle of denial ends with a reckoning. The United States has now entered the phase where mathematics, not politics, dictates destiny. The signs are not abstract, they're arithmetic. Total household debt has surpassed $18.4 trillion, and for the first time in history, over 60% of credit holders are either delinquent or paying only the minimum balance. This isn't a credit problem. It's a structural default in slow motion. The system is collapsing from within, yet officials still call it resilience. Debt is now the operating system of the American economy. Government borrows to sustain spending. Corporations borrow to buy back their own stock. Consumers borrow to buy time. And each layer of borrowing feeds the next, creating an illusion of motion while masking decay. It's a circular economy of exhaustion. Money borrowed, spent, and recycled into the same failing structure. What we're witnessing isn't inflation or recession in isolation. It's the convergence of both. A stagflationary spiral fueled by desperation, data manipulation, and institutional blindness. The cracks are widening across every sector. Credit card delinquencies are up 54% year over year. Auto loan defaults just hit their highest level since 2009. Corporate bankruptcies have surged 41% in the past 12 months. Meanwhile, personal savings rates have fallen to 3.6%, one of the lowest in modern history. That's not recovery, it's depletion. The economy isn't expanding, it's consuming its last reserves of trust, labor, and liquidity. As this machine spins faster, the Fed's options evaporate. Lower rates reignite inflation. Higher rates ignite unemployment. Either choice accelerates collapse. The economy has been engineered into a paradox where every solution deepens the disease. Each rescue package, each bailout, each fiscal stimulus adds more fuel to the same burning structure. When a society builds its prosperity on leverage instead of production, collapse becomes inevitable, not catastrophic, but mechanical. The question is no longer if the system fails, but how controlled that failure will be. History doesn't repeat, it recalibrates. The next phase won't look like 2008. It will look like paralysis, growth that isn't real, wealth that isn't earned, and leadership that isn't honest. The American economy has reached terminal velocity, and the ground is no longer theoretical. What's happening in America is no longer a financial story, it's a human one. The system that once promised prosperity now rewards only endurance. A generation ago, hard work built stability. Today, it barely prevents collapse. Wages have flatlined, prices have detonated, and debt has quietly become the new national identity. Every dollar borrowed is another day borrowed, from the future, from hope, from peace of mind. But behind the numbers lies a deeper tragedy. A nation pretending this is normal. The middle class is dissolving, yet politicians celebrate growth. Banks report record profits, while millions ration medication and delay rent. The illusion of strength has replaced the substance of it. This isn't just an economic reset. It's a moral one. A civilization cannot survive when its citizens are priced out of living. And if this trajectory continues, America's greatest export will no longer be innovation or freedom. It will be debt. Prepare, protect, and awaken. Because when survival becomes a privilege, awareness becomes resistance. The truth isn't comfortable, but it's necessary. The next decade will decide whether Americans reclaim control or become permanent tenants in their own economy.